Now, as we try to monitor the situation moving forward, do you think that the way economists, analysts assess the economy is going to change on a permanent basis? And is this a more useful way of assessing the economic environment?
Yeah, absolutely. Necessity breeds invention in 2020. What did we discover? A lot of our data is lagged. It gets distorted really easily. And we've seen the entire profession shift towards more private sources of data. If I told you a year ago we'd be using open table restaurant reservations or Google Mobility, you'd think that's not a robust way to do economic analysis. But now we're developing, we can back test, we know that we're moving in the right direction. You know, the number one piece of data that I look at every morning when I come in is not what markets did the night before or what PMIs did. It's vaccinations. Vaccinations is what's going to determine which economies come back faster, where my best relative trades are. That is something that I've never learned about in economic textbooks, but that's the direction that we're going to. So in the future, will we care about non-farm payrolls again? We will, but we'll probably have more information about what they look like. And I suspect markets will react less to traditional data than they have historically, given the explosion of new ways of thinking about the economy that happened in 2020. That is not entirely going to reverse.
Francis, going back to what Juliana was asking about vis-a-vis the fiscal and monetary coordination going hand in hand, I would also go one step further and say that monetary policy has actually dipped into the fiscal space. If you look at ECB, it's difficult to argue that they are not conducting monetary financing when for the year 2021, they're set to buy more bonds from Eurozone countries than those countries are net issuing. So it's difficult for them to defend that.
It's certainly challenging. And within the context of central banks soaking up a larger stock, not even just amount of purchases relative to issuance, but we're at the point where the ECB owns over 30% of outstanding government bonds in Europe. The Fed is at 20%. These countries are soaking up massive segments. And we know this is starting to create distortions. It's creating financial repressions when we look at bonds on an ongoing basis. And this is probably why you're seeing central bankers yield a bit to that political pressure, trying to put in comments about tapering, even if it's premature. On top of that, we have a lot of central banks expanding research into green initiatives, into income inequalities, into racial inequalities, and of course, into central bank digital currencies, which ultimately would be used to affect that inequality component. So there is absolutely under the surface a shift in the way central bankers are thinking about their role. And that's in part why the inflation strategy reviews are also important, because I think that they are going to give central banks a larger ability, more flexibility to target these unconventional types of mandates.